Hello guys, welcome back to my channel. So in today's video, I want to show you guys the difference between breaker structure and order flow, aka what I like to call continuation of structure. So that's my own made up word for it, just because people get breaker structure confused a lot when it comes to regular structure. So I'm going to show you guys the difference and the popular mistakes that people make. So the first mistake is something like this, where you just think because the trend is changing that you're breaking structure. This is not a break of structure because the trend right here is uptrend, right? We can see they had a trend line here, but the trend line here is downtrend. So structure means pretty much the break of a trend. So this is downtrend. So this is a low, high, lower, low, lower, high, lower, low. So we're not breaking the structure. This is the exact structure that's supposed to happen. This is correct order flow. This is correct order flow. I call that, well, it's called order flow. So it's actually called order flow in the correct terms. I like to call it continuation of structure just to compare to break a structure. Now, right here, we have a point of interest where price turned around. So the point of interest is reflected on the 1 hour. So I'm not going to change it, but this is a gap that makes sense on the 1 hour without the wick, and it gets filled. So the first thing that we have to understand is that we actually came up into here using up structure, right? So 4 highs and 4 lows is up structure, right? This is up structure. So this is where people will get confused with trend lines, which is why we don't use trend lines. And then from here down, we have down structure, right? So this is the sow, which is the last piece of down structure. So the break of structure is actually here. Why? Because we have an uptrend into the point of interest and a downtrend out of the point of interest, where it actually beats the low, keyword, write this down, it beats the low that came into this point of interest, right? Now, look at how I'm doing this on a macro level, and I'm not like even within my schematic, right? It's the low that's before the point of interest and breaks the sow is what is your actual breaker structure. So this is going to be a very simple video, but I promise you it has to be done correctly, which is why I recommend people join my course so much, because I promise you, like, wrong time frame, zoomed in too much, you're going to be doing the wrong thing. But this is the true breaker structure of the schematic, right? So a lot of people just do sow or your M sow versus your sow, which that is technically a breaker structure if it's before your point of interest. But right here also should be the first piece of structure that comes out. So this push in, we get a migration block, which is pretty much consolidation. So we don't break it right away. So that's how we kind of know that that's not even valid. So all these little tricks, you guys, it takes time to learn, but it's very important that you practice, and you have someone reminding you, hey, the reason why this is not a breaker structure is because this is the structure that brought you into the point of interest, and there's no lower low, whereas here there's obviously a lower low, and it didn't break right away. We have migration block, which again, smart money moves very intelligently, so it would be in the structure and out with a sow to show that we're going to continue going down. Okay, so here we have another breaker structure. Now this was almost a continuation of structure, and I'll show you why. Because number one, this is the low. This is actually the low of the overall structure. So technically we should be looking for reaccum. The reason why this is not reaccumulation is because we didn't really have that BC. Maybe we could have made some, like, let's see, BC, AR, ST, no, test, UT. Kind of. This could have been a reaccumulation, but the reason why I made it as an accumulation is because we had this, again, previous point of interest, and we actually had price walk down. Now, the only thing that made this a reaccumulation is, again, we had structure going into the point of interest. So if this just started here and you just had selling climax AR, doesn't count. Before you have that, you need to have actual structure, like actual 4 pieces of down structure before the schematic to make it an accumulation, because that means this was a downtrend and now it's uptrend. That's why we're actually breaking the structure. So if we literally didn't have that, like, let's say right here, say this was selling climax AR. Okay, let's pretend this was selling climax AR, ST, and pretend it came into something. We do not have structure here where we have a low or a high, low, high, low. We don't have structure coming down into it. Does that make sense? This is the actual structure. We can call this a trend, right? Regardless of the fact we don't use trends. This is not a trend. That's just price moving down. Okay. So that is the difference. So my issue is that I see a lot of people doing this, saying, okay, well, we have this breaker structure. Now we have this breaker structure. That's not breaker structure, guys. That's just order flow. That is high, lower high. That's normal walking up and down. This is continuation of structure, okay? So if we did BC, AR, ST, we don't have a third driver Shaco, so it's not a reaccumulation, but I'm just saying. And that's when we would be reaccumulating. But when we have moments when price is turning around and we have a separate trend, then we can structure it out and say, hey, this is a breaker structure, because at this point we have a down structure and then an up structure. Okay, so again, if I were to mark this out, this is a clear uptrend, this is a clear downtrend. Okay, several pieces of structure. Whereas here, you can see we don't have separate highs. This is the highest high, this is the lowest low. Whereas here, we can mark it out here, 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 and here. And the key is the point of interest, okay? Price walking into a point of interest is not just a random place where price is turning around. So I want to explain it one more time for you guys on a blank chart. So let me get that ready. Okay, so this is up structure. So up structure, we should be looking for reaccumulation. So this is the low, this is a high, this is the low. Okay, so this low made this massive push up, and this is the reaccumulation. So this would be, and I'm just going to use smiley faces right now, BC, AR, ST, ST's a sow, UA, shakeout, right? 3 drives up, 3 drives down, sign of strength. And this right here is the continuation of structure, not a breaker structure, right? Order flow. This is where this continues the order flow that's happening, right? Okay, so that creates this high. And then this is where we get our trading range alignment entry. And we enter the trade right here. So that's where I don't like the word breaker structure. So as you would see in this situation, this is not breaking any, this is following normal structure, right? This could be a high, this could be the low, and it's making another high. That's the normal structure. Okay. Okay, so over here we have a previous point of interest, meaning there was a huge gap right here where price has to come back and fill. Okay, so we have an imbalance or we have an order block. So again, structurally, this is the low, this is the high, this is the low, this is the high, this is the low, and then this is how we got in the point of interest. And this is our BC, AR, ST, and I'm going to do those smileys for you guys again. So this is BC, AR, ST, MSAL, sorry, another ST, UTAD, and then this is our major sign of weakness. And our major sign of weakness, again, broke this structure right here, which is the structure that gave us the buying climax into the point of interest, right? You can see this high or this low made this high, and after that, this was the last high. So this is our breaker structure where price went from uptrend and turned around into a downtrend, which is our sign of weakness, which is our trading range alignment entry. So this is buying climax. We actually tested this area in my scenario, and this is the entry. So my course goes over this in detail if you want to see this like broken down a little bit in careful detail. But, and then that's our sign of weakness, take profits at one of these lows. And that's how it goes. So a question I'm going to get, I think, is how do you know when, you know, this is a buying climax versus this? Well, first of all, that's why step one, and I also have my Smart Money Risk Management course where it teaches you about points of interest and stuff like that. And in the basic, it teaches you points of interest, or in the platinum package, but you need to be waiting in the right place. Because if you just chase any uptrend and downtrend, you're just going to think every 2-second rejection is a break of structure. This unhealthy price action is a key. You need to wait in the right areas. I don't run around the charts looking for schematics. I set an alert and wait. Then by the time this happens, you can start working with that. Are you getting that rejection? Okay, this is your M sal. Are you getting a major sal? You're not going to know until phase D. So again, you guys can download the playbook if you want to learn the different phases, but you're not going to know in phase ABC because phase ABC is just going up and down. So you're not going to know until you have that M sal versus sal with that break. And then once you get that sal, then this is already created to look for another point of interest in trading range alignment. Okay, so you're not going to know until like 80% of the work is done, but finding that 80% is waiting in that first place. If you're not waiting in the right place, then you're just going to be chasing around the schematics. Okay, so that's it for today's video. I hope you guys got value as usual. All the links to anything I offer that's going to take you to the next level, you guys. I promise you. The thing with YouTube, putting all this together, these little pieces, it can be really complicated. So I highly recommend starting with the Platinum package, getting the Smart Money Playbook. If you're watching this during Black Friday, we do have a bundle sale right now. So I highly recommend you check that out and go to the link in bio. So thank you guys so much for watching. Don't forget to comment, like, subscribe, and I'll see you guys in the next one.